As I said, this is our pre-market morning prep for June 12th, 2025. We'll go ahead and get started as always here at Gamma Edge with our three pillars: sentiment, structure, and trend. This pre-market prep will take roughly 5 to 7 minutes, possibly 10 minutes, and then we'll have a few minutes for open questions that you can post in the voice chat if you're joining us live. Starting with our market trend model, this is based obviously on the tick index if you followed us for any significant amount of time. We want to look at this bolded CT. This is our intraday instantaneous cumulative tick. If it is in a positive slope from lower left to upper right, that is indicating buyers are in control of the overall market. And if it's consolidating or upper left to lower right, indicating sellers are starting to take control. Into the afternoon yesterday, via our filtered cumulative tick plus 1,000 minus 1,000 buy orders, orders. We did see some selling come in, just not a significant amount into the afternoon, just a slight weakness coming in via the filtered cumulative tick, indicating institutions were most likely selling a little bit into the afternoon. Breadth indicator, new highs versus new lows, greens significantly above red, so more stocks were being bought than sold yesterday. And then you see the price coming down. And then our longer term look back period, our colored ribbon, the red is above cyan, indicating that buyers are in control of the overall market on a longer term trend. So takeaway, we're still in a bullish state. We saw some consolidation and slight weakness coming into the afternoon yesterday. So we'll continue to watch this today. Obviously want to see this bolded white CT start moving in an upward sloping fashion above these shorter term moving averages, indicating buyers are still maintaining control of the overall market. Moving on to the SPXA, obviously these are larger, longer term expiry contracts. We're coming in for June OPEX in the next week or so. We've been bullish, call dominated above and below spot price in the whole complex. We are starting to see a few what we call minor cracks in the bull ice. These would be in the money puts being exposed above spot price via either closing of contracts or expiry of contracts. Again, remember these are SPXA, so these contracts don't turn over very rapidly. And then we'll move on to post expiry. That's what's great about our web app is you can click these tiles and get an instantaneous snapshot of any expiry on out in time, or aggregate those expiries to get an overall structure and picture. So if we remove the 620 as indicated by the green circle up here, our expiry, we see some change below us. We see actually some put positioning or a erosion of the calls below us. So this could be indicating a slight weakness in the overall market after this expiry. Again, not a significant change. We're still maintaining our call dominated stance above and below spot price. So call speculators are maintaining control. But as you'll notice between these two pictures right here, we're fully green below spot price. And then after this expiry, we do see some exposure of the red. These are out of the money put speculation or erosion of in the money calls below spot price. So we'll continue to keep an eye on this and notice the next largest expiries are July and then September on out in time. So again, could be a slight change and weakness coming in via the SPXA, but we'll watch the positioning post OPEX and where that money gets positioned. Moving on to the SPXP, this obviously is our speedboat. These contracts turn over much more rapidly as indicated over here by 0DT as well as weekly expiries. To note this 6,000 level, we've almost completely neutralized that out. So you'll notice the net OI there is plus 592, but the call OI and put OI are basically zeroed out. So again, a significant round level, but note there's really no advantageous for bulls or bears at that 6,000 level, just a significant round number. We are call dominated above and below spot price. We'll denote the JPM short call below us. If we get below that 6,000 and stay below and then start pushing down towards that 5950, we could see these components of the JPM hedge become some sort of magnet for a pull down into that level of 5,900. Again, we'd have to stay below 6,000 and start losing the overall transitions and see a significant change in the market trend model, as well as the overall sentiment and structure as we are completely call dominated above and below spot price within the SPXP. Moving on to the SPXP GEX ratio, we've been talking about this for multiple days. Go ahead and look back at our previous pre-market preps. Again, this is a put call ratio where we add a time component, which is gamma. We've denoted that it's been on the bullish side, sloping up, indicating short dated call gamma, and call speculation was coming into the overall complex as spot price was continuing higher. Yesterday was kind of our first shot across the bow when we saw price depreciation, and then spot price sensitive via the SPX ratio. We did see a continued drop, obviously just indicating that short dated call gamma is coming out of the overall complex, and this could be via either positioning or spot price dropping, changing some of those in the money call contracts to out of the money also, and then put speculation coming into the overall complex. Again, maintaining our above our one, which is basically the zero balance between calls and puts, so we're still on the bullish stance via the SPX ratio, but just keep an eye on this as we saw a short-term weakness and short-term positioning possibly to the downside and a drop in the overall ratio of calls versus puts on the speculation side. Delta balance SPXP, again, we separate this via two planes, above and below spot price, denoted by the green dotted line above spot price and the red dotted line below spot price. And you see these obviously dropping as of yesterday via removal of out of the money calls, via spot price dropping, or just closing of mechanically contracts. And then the left-hand plane below us in the money calls dropping, or possible out of the money put speculation below spot price. And then the delta balance concurrently dropping via the drop in the left-hand plane and right-hand plane. Delta balance dropping is probably the more of a concern, as this is the aggregate of both planes, indicating short-term weakness could be coming into the overall structure and market. This just may, obviously, as I just stated, may be short-term via into OPEX, and then we see it rebound on out in time, and then we see a slight drop there on Monday for the 16th. So we'll continue to watch this, or sorry, the Tuesday, which would be the 16th, and Monday would be here, or 13th, and then 16th as indicated here. So Monday of next week, we may see some short-term weakness coming into the overall complex, and then a recovery after that. So again, we'll continue to watch this day over day to see how market participants are positioned via the SPX option structure above and below spot price. But as of now, short-term weakness may be coming in to the overall structure, or this may be just a, again, short-term phenomenon of profit taking. Moving on, the SPXP 0 DTE. So this is how we set our trading plan for the day. Denoted our legend down on the right-hand corner. So the blue is the DEX, the white is the GEX, and then the orange is our drunken sailor range. As we quickly cover the drunken sailor range, these are lower exposure areas where price can be influenced by intraday volume metrics. That's why we watch our vol M command intraday to get an overall idea of where market participants are positioning. So if we have the call centroids in a positive slope to the upside, obviously that would be more bullish and out of the money call speculation. If they're positioned to the downside via our vol M command, then that would be put speculation. And if the centroids are crossed, that would be a consolidation day. You can look back at our previous videos or our overall education where we discuss our vol M command. So quick takeaway is transition of GEX and DEX are overlaid. That's confluence, unambiguous today. If we are a bull, we need to see price get above the overall transitions, putting us in a little bit more call-dominated positive gamma state. If we're below the transitions, then we lean a little bit more bearish. As of this video here this morning, we had popped up towards 60.20, which was actually the spot price closing yesterday. So it's going to be an important level to watch as we come into the open. And then 6,000, is the index level, and that confluence that we've already talked about being zeroed out on the SPXP, as well as the bottom of the drunken sailor range. Again, our game edge philosophy here is that we trade at hopefully areas of higher importance or certainty, and that would be at the bottom of the drunken sailor range. If we're below that and we come up and test from the underside and get a failure, then we would look for an opportunity to short for a move back down towards 59.75 and 59.50. If we retake 6,000, we could look for a move up towards this 60.20 depending on where we open. If we open at 60.20 and test the overhead transition areas and then see a failure, that may be an opportunistic short for a pullback down towards 6,000. And if we do ultimately retake these transition areas, we look for the move up towards 60.60, top of the drunken sailor range. We most likely would not play that initial trade. And then above the drunken sailor range, we'd be looking for a move up towards 60.70 and then 60.80, where you see COTMC as of this data put dominated as we come into today. So the lean is a little bit more to the bearish stance because we are closed below transitions and then below transitions for the opening. And you see all of these puts located within this very narrow structure here, really within the overall drunken sailor range. but within this very narrow range and structure here. So traversing this range today will be vitally important via the intraday volume metrics. So we'll continue to watch those, how they play out after the opening range. Moving on to the SPXP net stat command, I was running this as of the time of the spot price was roughly around 6,004, and price had appreciated a little bit above that. So again, these are the highest sensitivity levels heading into the day. You see in the money calls below us at 6,000. We've already discussed that level will be vitally important on any pullbacks. But you also see the in the money puts above us at 60.20, and if you compare these left-hand plane integrals to the right-hand plane, in the money puts are winning the battle overhead. And if we're below 60.20 for today and stay below that, this area will continue to grow. The deltas will continue to grow more negative and overall be a headwind heading up towards that direction. Net charm wise, you see the out of the money calls not really outpacing the out of the money puts by a significant margin, but again, they're still winning the battle. So these will continue to grow throughout the day, providing an overall headwind within this overall area of 60.20 to 60.40, and 60.20 to 60.40 matches the bottom of that overall transition area too. So again, this may be a very noisy area within the drunken sailor range and transition areas. So most likely we'll refrain from trading unless we're above the transition above drunken sailor range, or we get some failures below these overall transitions and drunken sailor ranges with an opportunity to short. Again, I would shorten your time frame and trade a smaller position size for today, as this is extremely noisy within this overall range and transition area. So that's all I have for this morning. I'd be happy to answer any questions for anybody if they would like to ask any questions. Again, follow us on X for our pre-market prep post of SPX as well as single stocks. Make sure you're checking out our website and signing up for our newsletter, all the education that we post over the weekend, and our flagship education course, which is our Gamma Edge framework that provides basically all of the stuff I've talked about here, all of our tools, all of our philosophies, and how we look at the SPX options market to help us get an idea of positioning intraday as well as longer term, and help us formulate a trading plan and become profitable, successful traders very quickly using key gamma delta levels. We'll go ahead and look at our trading view heading into this morning here. So we did test up towards that 60.20. And we pulled back down towards the 6,009 level. These are our trading view key gamma delta levels overlaid via our trading review script. You can download those, provided for our members every morning and throughout the day, whether you're a 0DT trader or a swing trader. We have two different scripts. Again, so as I talked about, the key areas will be 60.20 and then overhead at 60.40 transition areas. Very noisy within this overall range of 6,000 up towards 60.20. So we will be at the mercy of the volume command intraday or volume metrics. So I can go ahead and pull up that volume command real quick from yesterday, and we'll do a quick overview of that. Thank you everybody for joining us this morning. So here's our end of day summary of the volume command, and you can watch that go through the time frames for the day. Again, as we saw yesterday, our call centroid slope started out in a little more flat, and then we started turning negative as indicated by the Lin fit lines as well as the slope. Linear fit lines are basically just projected closing areas if the market participants continue positioning on the same trajectory. And you'll see as we got in really to the 1 o'clock hour, we saw a slight rise, but our slope was continuing negative. So we are leaning a little bit more bearish, as well as looking at an overall pullback in the market. And then you see the put centroid really start to come down and start dropping after that 2 o'clock hour there. So again, negative slope. And you see those lines continue to come down. So it's really going to be difficult for us to move up in the afternoon with the market participants positioning lower via calls and puts. So this intraday volume metric that I'm talking about really gives us a granularity view of the market participants and the volume of options contracts that are being transacted in real time, and what strikes those are most likely targeting. So if they're targeting lower strikes, then obviously we'd lean a little bit more bearish. And for price depreciation, if they're targeting higher strikes, That is out of the money call speculation, and then we'd be positioning for price appreciation. But yesterday we really saw that slope. You can see it continue to make lower highs, so market participants were not positioning higher via out of the money call speculation. So again, our thesis and bias was to the downside for the rest of the day, and then we got a trend down really after that 1 o'clock hour. The little blip up, but really did not make new highs on the call speculation, and then we started to see that sell off really around the 1:30, 1:45 hour when the volume in the puts really started transacting significantly lower. So anyway, hopefully that helps. Any of the other tools anybody wants to talk about, any other questions, any single stocks anybody wants to review, post in the chat. We're roughly at 9 minutes, 10 minutes right now. So let me know if anybody wants to review anything. So. Oh, interesting. Baba. Okay, we'll take a look at it. Thoughts on GME? Let me pull up the web app. I'll take a look at it. How do we translate high GEX SPX levels into ES futures for trading? Kendall, we have a lot of ES traders in the room that I'm not sure what you're asking about high GEX levels, but there's a conversion where you can translate the SPX into the ES or ES into SPX levels. But a lot of our ES guys just use SPX also to trade that. Yeah, ES-FE adjustment. Thanks, Tom. Yeah, yeah. So a lot of our traders just use that adjustment to trade. Let me pull up our web app for you and. So here's our web app. I'm showing you. Sorry, hadn't authorized it this morning. So all of our Discord members have access to our web app. So basically, this is just the option structure positioning, and you can see net GEX, net delta, transition areas, total OI. Click your expiries off via the purple tiles over here. So we'll look at GME real quick. So how I would go about basically dissecting this in like a 3-minute look if I'm looking to trade this is, first thing my eye is drawn to is expiries. So obviously these are weekly only expiries. There's not daily expiries. So that's the first thing my eye is drawn to. Then call dominated. So that means the structure is call dominated above and below spot price, what the net gamma is. And then if we have enough total OI to make a decision, which we do. And then I would go over here and look at the overall structure, where spot price is at and where we're at to the transition. If we're below transition, that's a little bit more bearish. Even the overall structure is called dominated. But all of this red net delta above is in the money puts. So these are just continue to grow via expiries. This is going to be overhead, difficult to traverse unless you see a significant amount of out of the money call speculation. You do have a decent amount of in the money calls below you, really down towards that 20 level, which would most likely be supportive. But spot price is now below in GEX, indicated by this red dot right here. PGEX is at 30, but transition area is here. So there's kind of very conflicting things, but I would lean a little bit more bearish, even though we are call dominated, because we're below transition area. We're below in GEX, and then we have a significant amount of in the money puts overhead that are going to be difficult for price appreciation. So looking at this, I would not be going long this stock, even though we are call dominated, which just means it's supportive on pullbacks. But price appreciation to the upside is going to be very limited, at least in my overall view. Expected move, yeah, is very high, out of the realm of what I would want to look at. Again, GME is very speculative. It's not a stock that we trade here at Gamma Edge specifically, just because we like to trade a little bit more larger liquid stocks. So we'll just click on expiry. So this expiry is put dominated when in isolation. So obviously that is bearish, below all of the levels, significantly in the money puts overhead. Difficult for price appreciation. Let's take, or sorry, this weekly expiry. Let's take expiry off. Um, I'll click on these real quick. And we're after this expiry, we are call dominated, so the structure does get slightly better after this weekly expiry, but we're still below transition, which is very wide. That's uncertainty, and in the money calls below us that can be supportive, but a significant amount of in the money puts overhead too. So really, this is a difficult structure for price appreciation. Moving on to MU. Okay. MU call dominated above and below spot price. You see significant amount of green net delta. That is extremely bullish. You see above the transition level. So any pullback will be supportive. This has weekly expiries. So let's do this. And then invert. And there we go. Call dominated above and below spot price. We see COI at 120. So that'd be the upside target. Most likely, I know MU doesn't move very rapidly. This is a larger, very liquid stock. So that would be my thesis on this. Pullbacks can be bought, call dominated. Again, SPX COI at 120. That would most likely be the cap after this expiry, unless you see this structure continue to move up. That's the great thing about our web app also is you can click through these expiries and isolate them and see if this PGEX or COI continues to advance in the overall structure. Actually, you see it drop there on the 27th. So obviously after OPEX, you see COI come down. So this could be not necessarily bearish positioning, but indicating that the calls or COI is actually dropping. So most likely price appreciation up towards that 120 after this OPEX may be a little bit more difficult as the highest call open interest is not being maintained past the current OPEX. And then after this OPEX, you can click through and look at these tiles and see if that money gets repositioned on out in time for out of the money calls, and whether that COI and PGEX structure continues to advance. And if it does, then obviously price appreciation may be more likely on out in time. So hopefully that helps on both of those. If anybody has any other stocks they want me to look at, I'd be happy to do that for you. I can hang around for a few more minutes. But that's the quick takeaway. That's what's nice about this web app. You can quickly glance at it, really about 3 or 4 key metrics to look at, and then you can flip through your watch list just very rapidly and just see whether we are, quick takeaway, whether we're call dominated, whether we're above transition, and where the structure looks like and what those key levels are to the upside or downside. So yeah, absolutely. And the other thing we like to do, Mosey, if I said that right, about MU is I would go look at other components within semiconductors, right? Obviously, you'd go look at NVIDIA, I'd run down the whole semiconductor list, or look at SMH and really see if that whole sector is call dominated, what the ETFs are, and see if that sector is getting a tailwind, or if the overall sector is getting a headwind, and MU is just in isolation with the overall sector. So. All right. Thanks, everybody, for joining us. Everybody have a great day. And again, make sure you're following us and set your alerts for YouTube, as you'll be alerted when we go live with any of this content. So, all right, everybody, have a great day.